Morning, kids. This one is for everyone except those of you who are about to retire. Because the problem with age is you soon run out of time where you can be helped. Assuming you made the right decisions, you don't need help, but if you're making wrong decisions and you're getting old or you are old, there's not much I can do to help you. But this is for pretty much everybody. You do not want, everyone's worried stock market. Stock markets go, oh my God, what's happening? Fuck the stock market. You don't want the stock market to go down. So let me explain why. For you young boys, would you like it if the cost of a PlayStation 4 went up, and up? Do you cheer the price of PlayStation 4 and video games to go up? Do you cheer for the price of gas to go up? Do you cheer for the price of anything to go up? And the problem with that is that, no, you don't want it to go up because it costs more money. You get less video games, less gas, less food, less everything as prices go up. But oddly, we cheer when prices of stocks go up because we think that's a good thing, and it's a bad thing. You want the stock market to crash. You want the Dow Jones Industrial Average to go down to 3, is what you want. And not only do you want it to go down to 3, you want it to stay there at 3. And the reason why is because then you can buy more stocks with less money. See? Unless you're invested in the stock market, which I know many young people aren't, and even if you are, you haven't made the lion's share of your investment to save up for retirement, you do not want stock prices going up. You want them to stay, you want them to go crashing down, and you want them to stay there until the very last day before you retire. Then you want it to go up 1,000%. Then you want it to jump to 8 billion. Now, that's not how it works. Markets what are called efficient. That means that they try their best to accurately price the stocks that are being traded on those markets. But keep this in mind. This is one of those simple little tweaks and adjustments of thinking that you can do to really understand economics and really help you down the road. Same thing with housing. Oh my God, housing prices are going down. Are you fucking joking me? You want those suckers crashing if you don't own a house. You want them coming tumbling way down. Right now that may reflect something going on in the economy, but neither here nor there. If you don't own a house, you don't own stocks. You don't own silver, you don't own gold, you don't own mutual funds, you don't own real estate investment trusts, whatever it is, you want prices crashing. So especially for you younger people, where your teachers have failed spectacularly, teaching you the basics of economics, investment, and finance. The stock market going up is a very, very bad thing. You want the stock market to crash. So every morning you wake up, you cheer that it goes down. Every time you hear news that the stock market dropped 400 points, you cheer that on, man. You want it going low. Because, and you can look at this later on, I may even do a video about it later, look into the thing called the dividend yield or the price to earnings ratio. Better yet, look up the article I wrote, When You Abandon Fundamental Value. Hang on, let me look it up. And I apologize for the lull. Yeah, when you abandon fundamental value. I wrote this, I kept updating it, so it's in June 2011, but I wrote this sucker back like in 2008, 2009. Anyway, read through that, all right? So hopefully you learned a little bit of an economic lesson of today, and share this with all your other younger friends that are panicking about the stock market. Toodles.